there's great benefits of investing with the huge operator, right? There's nothing wrong with that, right? There's plenty of good, big shops that you can invest with and get good returns. But if you want to do this actively, one way you're going to need relationships. This is a very relationship-driven business, and networking is great. And one way that worked for me, at least, to network and build relationships was to invest passively with other operators first.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Bernard Pierson has been in real estate for 10 years. He started off in development and has since transitioned to full-time multifamily investing and syndication. Bernard, welcome to the show.
Thanks, Sam. Happy to be here.
Hey, the pleasure's mine. There's 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
I started I used to do food brokerage. I was I had a job at a college, W-2 for 1 year, but right into, pretty soon I quit. That was an accounting job. I was bored out of my mind. So I quit. So I like to say I started off with food brokering, which is kind of like my entrepreneurial path that I took. We did pretty well. Very transactional, and I figured that out pretty quickly, and that's how I found real estate and ended up partnering with some great partners that had experience, and that's how I got into development. And we did some developments in Latin America, specifically in Nicaragua and Costa Rica. And I then transitioned over the last 5 years or so just to full-time multifamily investing in the U.S. Because I found out that there was a lot of risk and a lot of things that I was not thinking about before that Latin America exposed us to, basically. So yeah, now, I think that was around 90 seconds.
No, I think that was perfect. That was
okay.
Well done. Thank you. Yeah,
Thank you.
Food brokering, can you? That doesn't mean anything to me. I'm just really curious. Can you give me a 10-second highlight? What does that mean? Yeah,
so we would source the suppliers and find buyers for beef. We did coffee. We did sugar. And we're obviously, I'm half Nicaraguan, part Nicaraguan, part American. And I grew up in Nicaragua a lot of my life. I lived there from like 6 years old to 18. So I just know a lot of people. It's a small country. Right. It's a very agricultural country and a lot of food production. So that's how I got into that.
Got it. Very, very cool.
Very transactional though, because it was based on finding the buyer, finding the seller and the buyer. And as technology, and globalization has grown, it's just the value of being that intermediary is not as valuable, I guess, anymore. Right. So we used to have a transaction here and there and we used to make a lot of money on the transaction, or good money, but it was very transactional. We weren't really building a sustainable long-term business that would work without us being there.
Let's jump into the next section of your story there. Developing in Latin America. It sounded like there were some risks or some lessons you learned the hard way.
Oh yeah. Yeah. So there's 2 reasons I ended up going back to Latin America. So when I was 18, I came to the US. I lived here for a long time. But when I got back into real estate, there was 2 things I was looking for. One was partnering with someone who had experience. So development, in my case, check that box. My partners, my potential partners at the time, had experience developing for many years in Latin America. And so the other thing was going in my case, I was going back to Nicaragua originally, at least at the beginning. And this was home, right? It was a place I knew a lot of people. I knew the area very well. So I checked those 2 boxes. I was local to Nicaragua and I had partners with experience. The part I missed was Latin America can bring many risks that we just aren't aware of here in the US. And those are specifically going to be politically or just political risk, and just the economy in itself is not as robust as it is here. Investments are going to be a lot less liquid, and it's there's just a lot more risk in general. And I did a lot of research into that back in the time at that time, right? And I really found out that the risk adjusted return, at least for me or from my point of view, or the analysis I did, was a lot better in the US than in Latin America.
Right. So if I'm hearing you right, you're saying that there was, you were taking on a lot of additional risk without the additional return that would be involved in assuming that additional risk. Was this something when you're doing these development projects, is that where you cut your teeth in raising capital and bringing in outside investors?
No, we worked with most of our developments. What we would do was the seller of the land would get some sort of, we would creatively finance the deals where the seller of the land would gets either equity or maybe, I don't know, if we were building a condo building on the seller's land, well, then they would get a condo or two, depending on the value, right? That of the land, in payment for their land. So we didn't really work with investors much. It didn't require tons of capital. A lot of the capital we put up, which was just at-risk capital of the pre-construction phase, which is the designs, the architectural work, and all that stuff. The seller of the land put up most of the equity. And then the bank put up the rest, which was just construction, right? Or the bank would basically finance our hard cost. Right. We would finance the soft cost, and the seller would just finance the equity or the land.
Got it. Yeah. So you did a few of these projects. You said, man, there's way too much risk in that. I see greener pastures in investing in the United States multifamily markets. What did you do to transition into that space?
Right. So the reason I found out was while I was developing in Latin America, I was also investing passively in real estate. I was an LP, and I was seeing, man, I'm getting great returns on these LP deals, and I'm not putting much work into it, right? Or if any at all, or no work into it except the due diligence right at the beginning and signing the paperwork and all that stuff. I was traveling. When I was developing, I was still living in the U.S. I wasn't fully living in Nicaragua or Costa Rica. I would travel every week, Monday through Friday. It's a 2-hour flight from Miami. So I was based out of Miami, and I would just travel every week. Sometimes I would stay the week, and my wife would come over. But I was basically, we were half and half between the two countries, right? So I as I was seeing my LP investments, maybe not outperforming, but at least matching, and in some cases outperforming my active work in development. So my LP, my passive stuff was doing better, when I was doing nothing. I was like, no, this is something I have to transition to. At the time, also Nicaragua, back in 2018, we had a pretty bad social, economic, political crisis that the economy came to a standstill. It still hasn't recovered. And it was just a perfect time to transition full-time into active multifamily, let's call it.
Got it.
Yeah.
And did you? How did you build your team members? What did that process look like to go? It's one thing to be a passive investor, and it's another thing altogether to say, all right, now I'm going to go actively start taking down deals. What are some steps you took that you feel like other people should take? So
if you have the opportunity to invest with another operator, get to know an operator, invest with them. If you can invest with one that's not a huge operator, I mean, there's great benefits of investing with the huge operator, right? There's nothing wrong with that, right? There's plenty of good, big shops that you can invest with and get good returns. But if you want to do this actively, one way you're going to need relationships. This is a very relationship-driven business, and networking is great. And one way that worked for me, at least, to network and build relationships was to invest passively with other operators first. And I got to meet them, and my first active investment was actually with one of the sponsors or operators I used to invest with passively. So that my passive relationship or my LP relationship with this operator ended up being a GP or co-GP relationship.
That's cool. I love that. And you already know the deal sponsor. Like,
yeah.
When this goes live, it's not like you're going, oh, okay, well, let me get to know you and see if we can work together. So no, I already understand how you work. I've seen all your deals up front. I've participated with you. Now is there a way to join the team and help take these down together? The majority.
And the sponsor also wants to know you too, which is if they're going to team up with you, right? And even if you're just going to be an investor, they'll want to get to know you because there can be some LP investors which are not desirable to some sponsors for different reasons, that I'm not going to get into right now. But a relationship forms. If you've been investing with the sponsor for 1, 2, 3 years, they'll get to know you. You'll get to know them, and especially if you're if you go into not that you're going to call the sponsor every day, right? But maybe you speak once a quarter or just once every 6 months, whatever, like these guys used to have a quarterly call, for the investors, and I used to log into the calls and I would see them there. And yeah, I probably invested, I want to say in 4 or 5 deals before I went into an active deal with them.
Right.
So yeah.
Right. That's a great way to get to know somebody up front. We talked about this off air, and I want to make sure that we spend probably the rest of the show talking about what it's like raising capital from foreign investors. Because you told me that the majority of your investors come from Latin America. What has been the process for you? I mean, how does this work? Mechanics of it? What's the investor education like? Can you just tell us because that's a very unique, aspect of this business that you bring that many of our guests on the show just don't have any experience in that. So I'd love to hear how you do that.
Right. Yeah. So it's very different for several reasons. And one thing that's important is that an investor from the UK is not the same, or from Canada, or from Nicaragua, Venezuela. They're all different. They're all going to be different. Tax purposes, legal reasons, culturally, language, they're going to be completely different. So I'll start off with how I met them and how I got them into my and why they invest with me. And that's, for me, it's simply because I'm in Miami and there are other multifamily operators that speak Spanish and are from Latin America, but not many. There's a lot less. And I'm one of the few that speaks the language, the multifamily language in Spanish, if it even exists, right? Because just the concept of multifamily that doesn't even exist in Latin America. It's okay. This rental, like a rental building or a rental community, we don't really have that much. I mean, we may have a little bit of that in countries like Chile, maybe Mexico. Colombia is starting to see some of that, but it's rare, right? You won't see it in Nicaragua or the rest of Latin America. Right. And if you see it, there's very little of it. So first, it's that education part, right? And trying to educate someone in a language that's not their native language, right, is not easy. Right. So I have that advantage that I can educate them in Spanish, or I can tell them about the industry in Spanish. And what I've done specifically to get to know these investors is I've been invited to speak to groups of investors and conferences or meetups or gatherings here in Miami, right? Because Miami is like call it sometimes the capital of Latin America, right? And so I get invited. It's the perfect place to be if you want to be exposed to Latin American investors. And I just got invited to these conferences. I speak in Spanish, talk about the industry, talk about what I think, talk about from the basics up to more advanced stuff, depending on who the audience is, right? But I do it in Spanish. And I after every event, at least 4 or 5, individuals from the audience come up to me, and the conversion rate of investment is 50 to 60% of the people that come up to me after I don't even have to reach out to them. It's just, it becomes a very good connection, I guess. And so from there, the interesting part is that if most of the members of the audience at these events, or even if it's not an audience, even if they're just in Miami and they're interested for some reason or another, they're interested in investing in the US, they're usually here for a reason. And that reason is very similar to my reason, which is I found out that Latin America has a lot of risk, has a lot we have a lot of political issues. We have a lot of social unrest. There's unlimited number of things I can go, I can go on all day here. So we identify very easily, right? And I basically I've been where they're at right now. And recently, these are countries like Peru and Chile, where they're having, I guess, swings politically, where they're nervous that they may, I'm not saying they will, they won't, but they're nervous that they may become like a Venezuela or something like that, right? So they're nervous, and we can help, right? They're getting exposed to real estate in this country. I explained to them how I went through the same, and how I measured. I have all these measurements I made and indices and all this research I did back in the day on why the risk-adjusted return is better in the US, at least in real estate specifically, than it is in Latin America. And I show them all the data and explain it to them. And I wrote a thesis on this, right? So I know my numbers pretty well. And which is another thing, right? When you speak to your investors, know your numbers, even if it's not the deal numbers, just know your numbers of the demographics, the city, whatever you're trying to get across. And yeah, that's basically how I've gotten them to invest with me.
Are you bringing capital in from out of the country?
Yes, we are. So if you're going to accept money from a foreign investor, there's a lot of things you have to consider. Most countries in Latin America do not have a tax treaty with the US. The only two that will have a tax treaty with the US are going to be Mexico and Venezuela. So Venezuela, you can't even do business with them for other reasons. So you can scratch that one off. So you're left with Mexico. I think I don't know if it's Peru or there's another country that's negotiating the tax treaty, but not that I know of, at least. There's no other country that has an active tax treaty other than Mexico. So usually, right, and you would have to talk to your CPA about this, but usually if they don't have a tax treaty, you're going to have to withhold when you distribute back to them, right? So that withholding is just going to kill their returns or their cash flow. And the only way, usually, again, that they'll get that money back if they invest individually is if they file a tax return in the US. Right? So, and a lot of these investors don't want to, just because they don't want to have to deal with another tax return, or there's different reasons why foreigners don't want to file taxes in the US.
Sure.
And what we do is we have a team of, and this is what, if you're interested in working with foreign investors, find a CPA or an attorney or a tax attorney that knows this area very well. Not necessarily real estate, but just taxes, just international tax law, and has worked with foreign investors before. And they can help you, and they can help the investor. And that's basically what we do. We refer our investors to a CPA. They sometimes have their own, but if not, we have the players that we can refer them to that can help them. Sure. And that's the only solution we can give them. And it's going to take them time. So that's the other thing you have to know. It's going to take them time to structure themselves. It's not going to be like your US or like your domestic investors where they can sign a PPM online and they can wire the money the next day. Not that it happens most of the time, right? But technically they can fund, in a day or two. Sure. That's not going to be the case for Latin America. It's going to be a lot longer than that. They're going to have to get the appointment with the CPA, with the lawyers, talk with them. It takes time. It's going to take a couple of weeks, month, 2 months, 3 months. So it's just going to take time, and just encourage them to talk to that CPA. What we usually do is that we ask them to invest as a US person, and they can do that if they either get an ITIN or some sort of US entity. Again, they have to talk with their CPA to do it right. And I'm not saying just go get an entity online or anything like that. It won't work if you do it, especially if you're a foreigner, because there's a lot of different things that you have to do right. But if you're a syndicator or you're trying to raise money from foreigners, it just makes your life a lot easier if they invest as a US person through a US entity.
Right. Yeah. And that's, I guess, just to reiterate your advice is to find a CPA and an attorney that really knows international tax law and is quite familiar with this process. It sounds like that's the way you've gone about, one, relieving yourself of any risk or giving bad advice, but also ways to streamline it and make it easy. Just say, hey, go talk to person, X and Y. Right.
And also talk to that CPA or that attorney before, so they can, you start forming that relationship, and they already know more or less what you do. So that'll save a lot of time. It's not going to be your investor then coming to you. How does this work? What's the mechanics? How often are you going to distribute? When are you going to sell? When are you going to do that? Right. So there's a lot of specific things. Like there's certain tax laws that allow you to, if you dissolve an entity, then there's a lot of tax advantages to the foreign investor, for example. Right. So they're going to start asking you, when are you going to dissolve it?
Right.
And you might as well have answered that before, if it's the CPA you referred them to.
Right.
So
is there a dollar amount, like when an investor comes to you? I mean, we see in most syndications, 50 to 100,000 is a minimum investment, and obviously they go up much higher depending on, what it is you're getting into. But is there a dollar amount for a foreign investor where this just doesn't make sense? I mean, is there a minimum?
100%? Yes. So in our head, if for Latin American investors, that amount is going to be about 250. 250,000.
Right.
If it's less than that, it'll probably be more expensive to structure everything than to invest.
Right.
I've heard other operators say that they can do 50 or 100K and they're fine with that. I don't know how they do it, right? But for us, that number is closer to 250.
Right.
That doesn't mean it has to be 250 on every deal. Once they start building the structure, they can become more efficient and reuse their legal structure or whatever, right? There's certain economies of scale that they can start enjoying.
Right. But out of the gate, if you're, in your opinion, if it's less than 250 grand, it just doesn't make any sense because of the administrative burden of getting everything set up. You've diluted your returns to the point where it's kind of like, okay, well, this was an exercise just for
100%. Yeah. Just the entities that they have to form, the legal costs you're going to have on all levels. It's just going to probably be, it's going to dilute the returns. Yeah.
Right. Yep. Cost prohibitive. That's really, really awesome. Thank you, Bernard, for taking the time to break down this process and how you've gone about bringing foreign investors into the U.S. I think that's really cool. And again, certainly it's something we haven't talked about a lot on this show. So appreciate you kind of giving us the insight on how that works for you, down to the dollar amount that maybe it makes sense for. And then, just the kind of some of the risks that you also see in investing in other countries. I mean, you personally have experience in doing development in other countries. So I think that's also something really cool that we've learned here from you today. So thanks for taking the time to share with us. I certainly appreciate it. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
I'm on all those social media platforms: Facebook, Instagram, LinkedIn. Look me up, Bernard Pierson. Pierson is Pierson. So just look me up. My company, and you can send me a message. I'm pretty responsive there. You can also email me. My email is bpierson, BPIERSON @equitipartners.com. And we spell equity with an I at the end for international, not a Y. So it's at EQUITI partners.com.
Awesome. Bernard, thank you so much. I do appreciate it. We'll make sure we link all of that there in the show notes. Appreciate you coming on today. Have a great rest of your day.
Thanks a lot, Tim. Great being on here.